Hello guys, welcome to my channel. So today I'm going to be showing you how to trade boom and crash without indicators. So let's get right into it. So trading boom and crash without indicators requires a knowledge of market structure and price action. This knowledge requires you to be able to identify market structure formations and also market structure breakouts. Just like I said in my previous video, you will notice that for trading any financial instrument, you can find market structure everywhere, from the daily charts to the 4-hour charts to the 1 hour. For you to see a clear picture of market structure formation, you will sometimes have to change it to a line chart, and sometimes you have to go as far as shrinking your chart even more so you see a clear picture of this chart formation. Now guys, I'm going to explain something to you that most people do not consider when trading, especially for beginners. Imagine two people in a city, and one is looking at the city from the helicopter and the other one is looking at the city from the street. You know, the person, you can tell that the person looking at it from up there, the helicopter, will be able to see a wider perspective of city. We see all the corners and all the roads compared to someone looking at it just from one perspective. I'm saying this in respect to trading the market from a higher time frame. Someone who does market analysis on the higher time frame will always have a bigger picture compared to someone who is always trading from a 15-minute chart. So what am I saying, guys? Before you start trading boom and crash or any financial instrument, always look at the higher time frame so that you can get the market dominant trend. There's always a dominant trend. Any other trend you see that is not dominant trend is a retracement. So I hope that has been established. Now let us go to trading boom and crash without indicators. So this is our daily chart, right? These are daily charts, and our plan is to look for market opportunities on a bearish trend, right? And the reason is because the dominant trend on this market from 500 is a downtrend. You can easily tell this is a downtrend. The market is bearish, so we can say the dominant trend is bearish. So since the dominant trend is bearish, a patient trader will only be looking out for sell opportunities. So how do we now spot a buy and a sell on this market since we do not have indicators? It's pretty simple. With the absence of indicators on your charts, you have to bring out your tools for analysis. You need your trend line, you need your horizontal line, you need your Fibonacci tool. These are the three things we'll be using for this tutorial. So first of all, we are going to identify key levels. I talked about this in my previous video. You know, these things you keep hearing me repeat these things in my video, even when I start talking about Forex trading. We are going to focus on key levels. Key levels are areas where you find strong support and resistance zones, not the minor ones. They are major ones, you know. So in this market, you can easily tell that this is your key level. You can call this as your stopper. This is where you see your pin bar. This is where there was a price rejection, the most recent price rejection on your daily chart. Now I've mapped this zone. Let me add one more thing so that you'll be able to see it. This is the zone I'm talking about. I hope you can see it as I have mapped this line. If you expand this, you get to see that in this zone, you see multiple rejection. There was a rejection here. Let me map it out for you. There's a rejection here. Another one here. Another one here. Another one here. See how before we actually broke the zone. So Based on this data you can find here, you can tell that when the market retraces back to this level, the market now is retracing. When it retraces back to this level, there's going to be a form of resistance and excuse me, and consolidation before the market continues in this bearish move, right? Okay, so let's keep going. I hope that has been established already. So now you are going to add another tool in identifying your sell level. Okay, so this is where you add your Fibonacci. Now when you look at this chart, where is your highest point? Your most recent high. Where is your most recent high? Your most recent high is right here. This is most recent high. You can tell, isn't it? Then before the retracement started, where's your most recent low? The most recent low is right here, just this zone. You're looking at it as a zone. So what you're going to do, you're going to take your Fibonacci and draw your Fibonacci from your most recent high to your most recent low. Guys, you can see that. You can see how your Fibonacci level aligns with the previous rejection on this zone after mapping it out. Now, for those of you who are not used to Fibonacci, maybe you can leave a comment down in the video, and if you want me to make a separate video on how to properly and correctly use Fibonacci, I'm going to explain Fibonacci in depth. Retracement levels and reversal levels to 100 level. I'll take up my time, but for this training I'll just make it quick because I don't want the video to be too long. So the question now is, how far will this market go? It's pretty obvious that this market is going to get to the zone. Now for most traders, you're going to hear things like, why can't I place a buy and start, go bullish route from 500 until it gets to that level? Now the risk now there is, when you decide to go bullish, the market might not go bullish all the way immediately. There might be some resistance at different levels. It might get to this point, comes back, get to the point, and maybe take you out before it finally goes up. So we do not know how it's going to behave. Why? Because this is not the dominant trend. This is a retracement, right? It's retracing. It will only do you much good when you sell, which is dominant trend. You've heard the saying before, they talk about it all the time. Follow the trend. The trend is your friend. But most people forget to follow the trend, because each time you decide to go against the trend becomes your enemy. So you want the trend to be your friend, wait for it to get to that level, then you sell at that level. Okay, I hope you guys are getting this. Now this is the market that has not yet happened. Okay, so what we're going to do is I'm going to take it to a trend that has happened already, so we'll be able to make a trading decision. Okay, let me see. Okay, let me use this one. I'm going to use this whole zone to trade this whole zone now. Watch. Now there's a reason why I keep saying, when the market gets to a level, don't be quick to enter the market. Wait till formation has been broken, right? I talked about that in my previous video. In this chart, I'm going to give you a reason, and you're going to see why you should wait. Just like trading financial instruments, there are no perfect structures. There are sometimes you have structures that are formed, but they are not fully complete. So if you want to be aggressive on your trading, you're going to find yourself running into a loss. So let's establish, this is where we are trading from. We are looking at this point and this point. Okay, so let's establish the trend of this market right now. This is a daily chart. I'm going to show you this. You can tell that this market is on a downtrend. You see it. So anything happening is going to be a retracement. So let me expand it back. This is where we are trading from, right? The market dropped down to this level. When it got to this point, it started to rally up, right? Okay, so now the question is, how do I know the market will get to this level or just here? When you look at this straight trend here, what you're going to do first is identify the pin bar. Identify the pin bar. This here is your pin bar. You can see that, right? You can see how this pin bar tallies with this zone. Then, but this is not the only pin bar here. There's still another one here. You can see this is the first pin bar actually before it gets to here, but just to be safe, we have to map out these two zones. Alright, so now that has been said, when the market dropped down to this level, what you are looking out for when the market starts rallying up, you are waiting for the market to get to your retracement level. You are not in a hurry to trade. You wait until it gets to that level. Then, while it's getting there, you draw out the Fibonacci. You want to see how accurate your Fibonacci will be. So you can see that at this level, your Fibonacci price shoot a bit above the Fibonacci level, which is 61.8. So imagine if you had placed sell aggressively right here, you'll be at a loss, and probably your stop loss will be probably around here. So this is why it is good to wait. Like I said in my other video, don't just rush and start trading yet. Wait. So based on this information, let's see what we can do with this information. So imagine you're trading and it gets to this place. You've been waiting for this for days and finally gets here. Remember, the market has been buying for a long time, right? Let me change this to line chart. Let me see what we can do about this market. I see this is how to analyze the market. So I took my trend line and I found multiple touches on the daily chart. You can see there's a touch here, this point, there's a touch in this zone, there's one here, there's another one. You can see, right? It's clear enough, right? So I'll change it back to line chart. I'll take this out. Now we've drawn our trend line. We're going to add a horizontal line mapping multiple touches. Horizontal line on the cell, on this cell. So take a horizontal line. This is where you find your multiple touches, multiple price rejection. You can see the zone. Let me map that out for you. Here is 1. Here's 2 and 3. 2 and 3 there. There's another one here. There's another one here. And there's one actually 2 here. So you can see this is why when price breaks through the zone, it's going to definitely fall. So what you will do as a trader is this is where your decision comes in. When the price breaks through the zone, you wait for a minor retracement. And that way you can check this out is you can now go after the price has broken through the zone, you can map it out. This is your candle. You can see how prices, you can see how the candle broke through. Hold on. You can see how the candle broke through the horizontal line and the trend line. This is interception. There's another word for it. You can call it confluence. Yeah, it broke through the zone. At this point, you can start selling, and you can see how long the price went. So guys, I hope this was uh, worth watching. Hope you learned something in this video today. Other times I'm going to show you how to take profit with the Fibonacci tool. Let me just show you something. Pick it from the bottom here, drag it down to the top. You see how the market got to one of the reversal zones. You know that it's time to exit the market at one of the reversal level. This is a class for another day. So guys, like the video, share, subscribe, comment. Then also in the comment below, let me know if there are things you don't understand. Let me know if you want clarification on some certain things I talked about. I'll be quick to respond, and I'll make a video specially for you. So thanks guys. Peace.